Hello, friends. Good afternoon. I'm Tina Gadodia. So, in today's webinar, we are going to discuss about Consolidated OI, a new product which we have recently introduced. So, before going ahead with this concept, I would like to first go and take a brush up on what does the delta actually means. So before we understand the consolidated OI, let's understand the option chain again. Okay. So when you go to web.concept.com, option chain, this is the screen which comes up. Now let's see what we get the information from here. Okay. So you have various strike prices. I've taken for Nifty. I've taken the expiry. I have various strike prices. Now, the most important concepts in options when we talk about is like whether the option is at the money, in the money, out of the money, and so on. So basically, knowing the moneyness is really very important. You need to know the option which is at the money, the options which is in the money, and the options which is out of the money. So if you look here, Nifty is trading nearly 17,318. That's the fair price of Nifty for 9 September expiry. So the at the money comes at 17,300. Okay. So all the call options which are below this 17,300 strikes, those are in the money. And everything which is moving above it, that's out of the money. Okay. Whereas on the put side, all the option which is greater than 17,300, those are in the money. And one which are less than is out of the money. Okay. So this concept will be important every time you're doing the options trading. So what is your at the money strike? What is your in the money strikes? And what of your out of the money strike? Okay. Now, second, let's understand what does the delta does. So basically, delta of an option is telling you about this moneyness also. Okay. Delta is nothing but the change in option price to the change in underlying. Okay. And also it is the probability of the option ending in the money. Okay. So delta of 0.5 means there is 50% probability that the option will end in the money. Delta of 0.25 means there's a 25% probability that it will end in the money. Okay. Reverse for the put option. Put option, you'll always see the negative delta. Okay. Minus 0.5, minus 0.25, minus 0.81. So more the option is deep in the money, it will approach 1. So for the call, it is positive 1. And for the put, it is negative 1. Okay. And more the option is out of the money, it is approaching 0. So for the call, you see it becomes like a 0.001 and 0.05. And for the put, you see that it is minus 0.01. Okay. So as we know that all the strikes greater than the current CMP, you will see that the options is becoming out of the money. The call option is out of the money and the delta will be keep on reducing. Similarly, for the put option, all the strikes which are greater than the current strikes, those are in the money options. So you will see that the delta is minus 0.5, minus 0.6, minus 0.7. Reverse for the lower end. So in our earlier webinars, we have touched base upon this concept of how open interest works out. So let me take the open interest concept now. Okay. So now if we look here, this is Nifty 9 September expiry. So where do we see the activity majorly? So you have 18,000 strike where the highest call OI is there. If you look at nearly 50% of the OI was added up in the Friday session. Okay. You have the maximum put OI at 17,000 strike. But if you look at 17,000, 17,200, 17,300, everywhere there was an OI addition. Okay. So there was a put addition happening at the money strikes, 17,300. If you zoom in, you will see that there was certain put addition happening in the money puts also. So we know that as the strikes are going higher, it's a in the money put, right? Now this is Nifty's 9 September expiry. if you look at the 16th September expiry, you have a lot of put accumulation lower end. Upper hand, you have immediate resistance only at 17,500. Beyond that, the room is open up. Now, if I look at the 30th September expiry, so this is 30th September expiry. So the max put OI is at 17,000, which is nearly 14 lakh shares, out of which which is nearly 29 lakh 95,750 put, out of which 2 lakh 66,000 got added on Friday session. On the call side, 17,500 is there and directly at 18,000. Okay, so this is what the Nifty looks like. So in Nifty, you have the weekly options, you have monthly options, and you have a long dated options, right? The same picture is there when you talk about the Bank Nifty. So if you look at the Bank Nifty, 9th September, the highest OI stands at 37,000, out of which the call side 18 lakh 42,000, nearly 10 lakh was added on Friday itself. And thereafter, it was an upside, there's an addition happening. Also, we saw a put addition at 37,000. So both call and put were added up. You have various strike prices. You have various expiries, right? Same thing if I talk about, now let me take you to the concept of the sector. Okay, so when you do the built up script, you see all the stocks. There are various sectors in this thing. So when I say all sector, it is the complete market. You have Nifty, Bank Nifty, you have complete stock. Okay, so this is like a full market picture you're getting. But when I say I do only auto ancillary, so the stocks which are there over here are the part of auto ancillary stocks. So this is like a Bharat Forge, Exide, Apollo Tyre, Balkrishna Industries, Bosch, Motherson Sumi, MRF, Amaraja Battery. So these are the components of the stocks. So when I say I want to understand the option behavior of auto ancillary stocks, okay, can I figure out anywhere? Because so far, whatever we are doing, we were understanding from the futures perspective. So if you look at the built-up sector, all this product is basically the futures product. So where is the future? Is the future price up? Is the futures OI up or no? But if I want to understand the option behavior, where are the calls being written? Where are the puts are being written? How the sector is performing? Is there any short covering which is seen in the sector? We don't see anywhere, right? So let me introduce you to the topic for today. That's a consolidated OI, also like a market delta. We can call it up. So when you come to this consolidated OI, the first thing is like you really need to spend certain time on the screen, understand it, and then you can really analyze it very fast. So all your concepts of in the money ITM OTM comes handy. Your concept of delta comes handy, and not to forget your concept of option band. Okay, so this particular product is the summary of all of these activities. Now when you come to consolidated OI, so it is basically sector wise. So you have auto ancillary, capital goods, infra, media, Nifty stocks, reality, FMCG, metals. So all the sectors which are listed in our sectors product, all the sectors fall under this thing. Okay. So now when I look at the all, what are things we see on the screen? Let's understand that. The first is the delta bins. Okay, so take it easy. Let's understand what are these. So you will see there is a 0 call, 100 put, 5 call, 95 put. So what exactly we are doing here? We have 5 call delta along with a 95 delta. So 95 put delta. So this is for the put, we have removed the negative sign and now make it like a absolute basis. But the concept remains the same. Like it's the put strike 95. So basically we are talking here something which is like a deep in the money puts and out of the money call. So we all know that a deep in the money call is out of the money put. A deep in the money put is out of the money call, right? So now you have a picture wherein you have the call and put together. So when I talk about a strike which is 95 put, then definitely it is 5 call, because total will always be 100. Okay, the call and put delta together will never go beyond 100. So 5 call and 95 put is put together. 20 call and 80 put is put together. 40 call and 60 put is put together. So these are the bucketing of which we have done from the delta basis. Now the second concept comes here. You will see this is the only product where we are talking about in terms of contracts. So these are basically OI contracts. Okay, so we know open interest number of shares outstanding at a given point of time. So when I talk about the contract, this is nothing but the total open interest divided by the lot size. Agree? Now, when I say I am talking now on to one particular sector. So say for instance, we talk about capital goods. Now in capital goods, we all know you have L&T, you have BAIL, you have Siemens, okay? But each will have a different value of open interest. We each will have a different lot size. So we want to understand how the picture is framing out for that particular sector. So here we have come down to a common platform where it's a contracts. So when I say that in capital goods, you see a contract addition of 100, that means it is across the stocks of capital goods. When I say there's an unwinding of minus 30 contracts, so that means this unwinding is across the sector, across the stocks in that particular sector. Okay. Now let's understand how do we read it. So when you see, when you come across to this product, let's get back our open interest concept. Okay. So where is the highest put in terms of contracts? We are seeing that the highest put is at the put option is at 10 put. Okay, so 10 put is having 4,63,825 contracts, wherein 38,247 was added on that day itself. Okay, on Friday itself. So here you have the OI, you have change in OI both in the contracts term. So similarly, the concept remains the same. You have the OI, you have the change in OI. The change in OI is the incremental which we see. If there is any shedding, we see that there is a reduction over here. So if you look here in the 65 call, we saw there is a reduction of minus 6,394 contracts. Okay. So now let's understand how to read this graph. The first thing, if you look at this picture, what we see, there's an addition across the call, there's an addition across the put. So if you look here, out of the money calls, we are seeing the good addition happening up. Okay, so the highest call is the highest call open interest is at 55 delta. Thereafter, it is followed by 25 delta. Okay, and then at 10 delta. Okay, so if you look here, the max OI is at the 55, and then you have the 25 and 10 thing. The max put is at, you have your 10 put delta, and you see that majorly the addition we saw in Friday session was in 25 put also, and in say 35 put. And not to forget, we also saw the addition happening around say 45 put delta. So what we are seeing right now is in the calls, you are seeing in all the out of the money, there is an action coming up. Okay. In the puts, there is like an out of the money puts, there is action coming up. Also, if we see the put addition is there in the money put strike also. So here comes the difference. So when I say the entire market structure, there are puts getting written. Okay. So there are puts where there is a in the money puts activity also there. So when will a in the money option be written? It's only written when my confidence is on the upside. Similarly, when you see a lot of action happening on the in the money call side, so that means I feel that the pressure would be there and the stock can come below that strike, okay, which will make it out of the money. So if you look here, in the money call, we were seeing a reduction. It was spreading across the out of the money strike. Whereas in the puts, we do see that there is a in the money put, there is an addition coming up. So the structure is like, it shows that it's a bullish, underlying sentiment is bullish over here. The put writers are getting little aggressive. They are writing at the money strikes. So if you look at, we know that the 50-45 delta, this range is your at the money options, correct? So you see that the puts have been written near like a 45 put delta, 50 put delta, and those. So there is an underlying positive theme which is prevailing in the market, which is being communicated by the options data also. So we know there is no sector listed sector wise option thing coming up. You have the index Nifty, Bank Nifty. So this is like a derived inferences we are taking out from the option activity of that particular sector and the sector components. Okay. Now let's understand the auto ancillary picture. So if you look here, there's the call unwinding. So if you look at the highest now stands at 40 call, where nearly 3, 4, 6, 7 contracts were there, out of which 1900 were added on Friday session, right? So if you look at by Thursday, my highest was at this point, which later on became this point. Now, one thing we need to really understand here, there is, you always look open interest when it's the strike price. The strikes are the constant strikes, right? But when you are reading this product, you are reading in terms of delta, okay? So say for instance, today the option is at 50 delta. You got a breakout. The breakout led to the stock going up by 5%. So you saw that all the sector stocks were up 4%, 5%, and they were going up. So will the option continue to be at 0.5 delta? No, because as that breakout happened, so take a very good case of Reliance. Okay, Reliance quoting at say 2280 on Thursday, 2300 call was the highest one at the money. The moment the 2300 call, as the stock removed the 2300 call, now the 2300 call delta was 0.5. As the stock moved from 2300 and started going towards 2360, 2370, that 0.5 delta became 0.7 delta. Correct? Because now that option is in the money option. Right? So the yesterday's at the money will not be today's at the money. Okay? Yesterday's at the money could result into today's in the money call, or it could result into the today's in the money put. So if the pressure was on the lower end, you will see that the put option will become in the money. If the pressure was on the upside, if there was an upside momentum, you will see that the calls will become in the money, right? So if I understand here, we saw a good shedding coming up on the 70 call, okay? And we saw the good addition happening on the 40 call. So that means in the money call was something, we saw a breakout happening on this sector on Friday, where 70, 60, these strikes delta for the unwinding, and this is their it got shifted on the upside. Now that means this strike was earlier lower delta, which saw the spike up, and we saw the prices going higher. So whenever you start seeing that the in the money calls, the calls are getting unwinded and it is shifting higher, okay, you see that the shift is taking place on the upside, the trend is positive. So when you start seeing that there's a call unwinding happening and it is moving higher. Similarly, if you start seeing that the put addition is also shifting higher. So if I say Reliance, let me open oil. So if you look here, so the oil sector, now it is 80 call delta where there was 4,300 contracts unwinding. Okay, it moved to 55 call where there's a 4,800 addition. Okay, so the Reliance, the majorly we saw that the Reliance was contributing, ONGC was contributing, there was BPCL also going higher. So we saw the entire oil sector, the energy sector was in the uptick. So if you look at the data here, so the unwinding of contracts was seen over here and moved on to the new strike. Now if you look here, if you study at Friday EOD data, this where you have 55 call, right now it is 16,400 delta addition. So in short, again the next point is at the money. So we cannot be gung-ho about any rally like एक बार breakout दे दिया तो दे दिया. It's never that way. It's like in options, as you have more days left for the expiry, you will start seeing this volatility coming up. Today one sector is performing, tomorrow another sector will perform. So that's a cyclical thing which comes up. Okay, so if we start seeing again there's at the money, you start seeing we need to understand, unless we don't see this unwinding, it will not push higher. But one positive here is that you are seeing that the in the money puts are also getting written. So this shows the strength in momentum. Okay, that means now the put writers are also shifting higher. So if I look here you see that there's a put unwinding moving higher. Here also you have the addition happening in the puts. Here also is the addition happening on puts. Though the quantum is less compared to the call, it has to be, because very less people have that guts to write in the money option, because in the money option you're taking a bigger bet. Okay, so and you need to be really very confident that that option will become out of the money. So from the writer's perspective, you make money when your option from in the money moves to out of the money. And from the buyer's perspective, it is when your out of the money option becomes in the money. So understand this concept of option very well. So you will be really very sorted out. So if you look here, now if we see this picture, we again are a point where at the money option, there's a huge call addition. After 55, directly we see it as 30. So that means there's a good gap which is there. So 4-5% move in the stock is easily achievable once we start seeing the stock crossing any important strike zone. The put addition gives you a further confidence that the trend is really very strong. Okay, now let's look at NBFC. So if you look at the finance as a whole, so we saw a lot of call addition over here. We did not see much up happening on the unwinding side. So though there was there, but there was very less. So this shows that there are multiple hurdles, in the entire path, and it is not that clean one. Definitely, as the data changes, the view changes. But present, if you look here, the more support is there on the lower end, so that the put writers are still skeptical and they are writing very out of the money one. The immediate basis, we have 30 put delta is there. So still, if you look at NBFC as a sector, there's a lot of congestion. So this particular thing is like a whipsaw. up and down, and those. It's a sideways part. PSU bank. So now if you look at the PSU bank, there is huge OIs are being there at the 60 call and 50 call, sorry, 45 call. So it's nearly at par. So if you start seeing that together, all three strikes are unwinding. That's the point where the PSU bank will see that strong momentum coming up or the bullish undertone picking up. Okay. And on the put side, we are seeing that the 50 put so 50 put strike is having a lot of addition, so we are seeing that the 50 put OI is increasing. So more so, if you start, we need to have a close watch on how the PSU bank start behaving. So definitely now PSU bank is being led by majorly on the SBI thing, but this entirely takes into account all the stocks which are there in the PSU bank in the derivative section. So basically this index definition is a very inclusive stuff. So as the stocks comes into the sector, any derivative thing, it becomes a part of this particular sector thing. It has nothing to do with the exchange defined sector. It is more to do with the, if I say a new stock comes and it is a part of like a PSU bank, so it is a PSU bank category, it's added up in this sector. Now if you look at the pharma, a very strong congestion which is taking place at 45 call. So once we start seeing that this is removed, then the pharma will have a very smooth and clean move. So upside, if you look at the resistance, are very low. It's nearly half. And so the best point to play this is only once we start seeing a good amount of unwinding. Otherwise, this could act as a major resistance. But if this is removed, the journey could be really very smooth from the pharma perspective. Cement, yes. So we saw that cement 60 call, there was an unwinding, and it is moving to say 55 and 50 delta. Still, lot of hiccups we are seeing on the 50 strike thing. So unless we start seeing unwinding, a serious unwinding here, and the new 50 were coming into picture, we need to be very careful out here. But one positive again, the puts are also seeing the increase. So gradually the put writers are also shifting. So this is also a positive sign. Bank Nifty stocks. So banking, if you look here, so this comprises of the entire Bank Nifty component stocks. So you have 55 call and 45 call. These two strikes being dominated considerably, right? So once we start seeing this picture reducing and a new 50 delta, new 40 delta emerging up. So say for instance how it might move. If we start seeing any upside over here, this particular strike will see unwinding, this particular thing, it will move over here. Now this option, which is today 45 call and 55 call, it will start becoming like a 80-60 call, right? And again, this will become 50. So we don't need to get sticky with the delta numbers. We need to understand the concepts very clearly. So if I'm trading in the live market, at the money part of is moving, we start seeing there's an unwinding over here and there is a shifting happening here. So you know that which sector is under limelight and is this sector showing a very good strength, and then we can participate accordingly. So basically a very good tool for doing a top-down approach. We know that whether this move is supported, is it like a clean move where I can expect 15-20% jump, or is it a move where I expect 4-5% jump? So if it's a move of 4-5%, I need to be very fast in, fast out. And if the move could be like a 10-15%, I have bandwidth to play out, do the pyramiding, in out, and those things. So look at your power. So you have your 45 call, you have 3700, the 3691 plus 84. So this is still dominating. So still we have congestions playing out here. Same stuff with fertilizer. So others, so a lot of new stocks which have been added up, which doesn't fall in any of those category, falls under others. So if you want to know the components which are there in the each sector, you can go to the built up script symbol. So once you click on anything, you will come to know which are the stocks in that sector. So like the FMCG, media, you will come to know over here which are the stocks in that sector. So auto ancillary was a very good move. Yeah, so we saw like Bharat Forge and all the Excite. So all these saw a very strong momentum coming up. So we saw that this would have been the earlier 40-50 delta, now becoming 70 delta of call. And if you look here, the put addition is seen in the money put, which itself is a very strong thing. So whenever you start seeing that the in the money options have been written, that shows the confidence prevailing in the writers. Okay, because out of the money is but obvious, so people would be writing the out of the money option. There is nothing new into it. But when you start seeing that now they are getting aggressive, they are moving higher in the strikes, they're going in the money, that is the point which shows that the confidence is a different level confidence. Now, like an infra, we did saw certain action coming up over here. So unless we start seeing now, this becomes a good hurdle part of it. Even if you look here, the unwinding was not very high. So it could be still a range bound. So not a very clean move yet. Media, we have a lot of addition happening up on the call side. So the resistance are there. These stocks were reality. So here we saw that the reality 60. So earlier it was say 50 delta. We saw some good moves happening. There's an unwinding at the 60 call, 50 call, and move to 45 call. And if this trend continues, we have the upside still open. The put addition is staying strong. So we have like a 60 put, there was a OI addition. You have 45 put, the addition was there. If you note down the earlier strikes, so see that the deep OTM options unwinding is seen and it is now moving higher. This itself shows a very strong, whole picture. If my earlier band was this, is now moving towards this. So this shows that now the traders are expecting the price to go higher. FMCG. So if you look at the FMCG, the highest call, the major contracts is at 25 delta call only. It is not at the money. So that means that the people are not, the prices still have a lot of room to go higher. Okay, so FMCG, we have seen a very good, compositions and those things. So there are few stocks which are leading the pack thing. So from here, we can figure out that people itself are expecting a higher level in this sector. So we don't have a congestion coming near at the money. We have already at out of the money. So there is still a lot of room there in this particular sector. IT. So IT, you have like a 45 call, there's a addition happening up. So still a bit, you can say a resistance is there. So once we start seeing here unwinding, the picture could get clear. And if we start seeing this put also shifting higher, it will be a very strong positive moves. But now see, it's the broader market is in a bullish tone. So we are reading where it is going upside. But tomorrow when say there is a slight negativity which comes up, how do you read it? So in that case, you will see that the lot of action will be happening on the put side. The in the money calls will be starting written up. So you have this say in the money calls getting sold out. you start seeing that the put options are coming lower. So you see a lot of OI activity on the put side, downward shift. So when the band is shifting lower, the pressure is on the negative side. It's a negative outlook. And when you start seeing that the band is shifting higher, it is like a bullish undertone. Metals, so very strong thing. So if you start seeing that the metals 55 call, there was an unwinding, it was shifted to 45 call and 20 call. So one more thing, so say for instance where you see that's a good unwinding, let's see that the next majorly the addition was seen where. Is it the immediate strike or is it little far off strike? So we come to know that, say for instance, earlier in this strikes that there was say 10 lakh writers. Now that 10 lakh writers are moving above. So are they all moving above to the same strike or are they distributing it? So when you start seeing that the writing position is getting distributed, that itself shows that the band, then immediate resistance could be compromised and there could be again moving higher. So if I see here, same metals, there was an unwinding over here. The addition is seen at 40 call. The addition is seen at 20 call also. So that means there could be, if this short covering continues, the move could get extended further. Okay, so we need to understand how the activity spans out at that moment itself. But still the put addition is not on the in the money strike, so we need to wait and watch for this particular strike. If we see that this trend continues of the call unwinding, then we can play out on the long side. Auto, so auto we saw a bit of unwinding happening on the 60 call, but thereafter all the strikes we saw a good call addition coming up. Okay, so here the congestion is relatively higher, so you need to be really very selective in the stocks part. Private bank we discussed. So in short, telecom. So if you look at the telecom, the highest is at the 25 call. Okay, so it's been basically only three players are there in this. Like you have Idea, and you have Bharti Airtel, and I guess so there is a Bharti Infocom. There is one more. One second. Let us see the third one. Okay, Indus Tower. Okay, so this is there. So if we look, Idea, open interest. So if you look here, the Idea open interest was here. So we know that which are the components within that, and then we can take it further. Okay. So this is in short what the consolidated OI gives you. So consolidated OI helps you to do the sector analysis. So it is very powerful for doing the sector open interest analysis. So we have made it on the delta terms wherein we can get it into the parity. So all the 10 call delta, all the 15 call delta, all the 30 call delta are clubbed together to come into sync, and we see the picture on a holistic basis. Okay, so this is where we see that now if there is any unwinding happening at the money call, that can fuel up the momentum for the day. So we know where to look out for, which sector is the sector theme for the day, and then we can take it further, and then we can see which are the stocks contributing towards it and go further into it. So this is all from the consolidated OI thing. So I open the floor for Q&A. Just a sec. How do we know which delta is ATM, OTM, or ITM? So basically, your 50s. So we brushed up the first concept. Looking at the option chain is for the moneyness only. You know this is so at the money is usually between 0.5 to 0.55. So that is the zone of at the money. part of it. Anything which is greater than 0.55, those are in the money, and anything which is below 0.45, it is like a out of the money. So in the money call will be out of the money put, out of the money call will be in the money put. So if you look here, when I talk here about say reality, so this is like a 60 call and 40 put. Okay, so 60 delta call and 40 delta put, and this is like a 45 call delta and 55 delta put. So when I say 60 delta call saw the unwinding, this delta would have also moved it. So yesterday, say Thursday's delta, Thursday which strikes were at 50 delta, and say on Friday we saw that the 50 delta started moving up. This delta definition will also keep on changing, right? So the strikes will keep on changing, and we need to look out how the OI is. The participant again selling at the money, or are they shifting higher? So our main focus area here is to look at, are the participants selling or moving on the higher strikes, or are they restricting themselves to at the money writing? The next question. So say I do look at, say, the oil. We saw here oil 80 call, there was an unwinding, and 55 call delta, there's an addition. Now we know that the major components of the oil is Reliance, ONGC. So let's see how the Reliance behaved. So if you look at Reliance, 2300 saw the very strong unwinding, and it moved to 2400. So if you at Friday beginning of the day, 2300 was at the money, correct? As it surpassed and moved above it, this option which was earlier at the money has now become in the money, and the new ATM is at 2400. Now at 2400 we see that there's an OI addition. Okay, so if this have to move further ahead, this again have to come down, right? So this is what this entire story of the consolidated OI is also telling you. If you look at ONGC, this is ONGC. So ONGC, we saw 120, which was, say, the highest on Friday, same morning. That at Thursday EOD, that 120 call was the highest OI, right? So on Friday, we saw that 120, 115 saw the unwinding, and now the shift happened to 125, and 125 became the new major resistance area. So from consolidated, once you have bottled down to a sector, then start looking at the components within that sector. Okay, how fast can we get to the particular stocks in any given sector for which there is any significant change from one delta to another? Is there a mechanism, or do we have to check manually? We will get some more add-on products into this bracket. So we are working on to that part. So meantime, you can definitely look at, so if you know the stocks which are there, you can definitely look at the open interest and start looking at the stocks. Otherwise, you can know the composition from the built up script, and you can know the sectors, the components of the sector. But we'll definitely get out something more to this product as we move on. Then what about Bank Nifty on Monday, upward or downward? Chances crossing 37,000 in coming week, and also what can be expected from 36.8? Sorry, let's not get into a very detailed one in terms of the market view. Holistically, let's understand how this product comes into picture. So if we see that in Bank Nifty, you have 60 call, sorry, 55 call, you have 45 call, a huge congestion. So unless this starts seeing an unwinding, still we are not out of the woods. So Bank Nifty still is in like a strong writing zone from the option perspective. So once we start seeing convincingly these contracts getting unwinding, shifting higher, then the move could be very fast, very swift. But similarly, if we start seeing on the other hand, if there is a breakdown or something, and we see that this calls start seeing an addition happening up and the puts are seeing lower end, that means the breakdown is there. So you need to be very careful about the strikes, how the put and call both are moving. We need to check this during the market. So basically Saturday, so we don't have the live market, but this product will work very well during the market, post market, both. Post market, you are doing the analysis for the next day. During the market, you know that which is the sector to be looked out for. So say for 9:30, 9:40, look at the all the sector, just scan next, see which sector is showing the trend, then move on. So this product is for both intraday and expiry both. Do we have sector-wise index intraday movers feature in line with consolidated OI? Okay, I can take that suggestion. Let's explore how it looks like, how it works. So we do have the sector built up thing. So if you look here, built up sector, this particular product itself tells you about the which are the sector gainers movers thing. But intraday movers thing, this may not be as apt, but still will work out. Let's see how it looks like. Is the open interest data of the stock added in consolidated OI is added on an absolute basis, or the weightage associated with the sector in the, it's on the absolute basis. So basically the concept of delta came into picture for that reason only. So we don't want it to be a weighted average thing. We want the true picture to come out perspective. So that's the reason the delta comes into picture and the contracts come into picture. So it's basically all the stocks, all expiry at that delta point, whatever is the open interest is added up. So we have done little round up to the nearest 5 delta and it's been grouped together. Okay. So this is console. Let's see Nifty. So if you look at Nifty also, you have like at the money Nifty 55 call as the highest OI part of it, 65,000, and next is at 45 call. So comparatively, you see a lot of Nifties are there. So since we have the weekly option, monthly option, everything combined together here. So this particular picture, so once you start seeing this, we can easily see 17, say in short 17,300 removing convincingly, 17,500 comes into picture. So you see are seeing that. Puts are getting written up at 45 put and say 60 put. So 45 put and 55 put. So this is also positive, but we need to see a good unwinding coming up here. Okay, so I guess so. Can it be used for futures? We do have many futures product already, so use that. But definitely see, in short, I always feel that futures data can be used for option trading and options data could be used for futures trading. So derivative works holistically. It's never an isolated one. You get a signal here, take a trade in futures. So everything works together. So futures and options are interdependent and interrelated. Perfect. So I guess so. The questions are done. So it was really pleasure talking to all. One point I missed out. So it's at times certain feel that I don't want to see both call and put together. I can definitely move on to the only call, only put, and see the structure. So if that works out, that can also be done. So it's a different way of looking at the data, which suits you. You can do that. But surely I would recommend start using this product for a top-down approach. This will give you a complete sectors, options, open interest picture, and then do a top-down approach. Thank you very much. Stay safe. Bye-bye.